So my dear friends, I have never made a video on candlestick pattern analysis, but you know that candlestick pattern is the basic thing of technical analysis. If you want to trade in the stock market, if you want to learn technical analysis, the first thing that you should learn, that is candlestick pattern analysis. So in this video, I thought that I'll be showing you how to learn candlestick pattern analysis for day trading and how you can make intraday consistent profits out of this candlestick pattern analysis. So now, if you go to a cricket coaching camp, the first thing that they will teach you that how you need to grip the bat if you want to become a batsman, and if you want to become a bowler, they will first teach you how to actually grip the ball. So that is how you will be finding in the cricket coaching camp. Similarly, if you want to go to any trainer in the stock market, the first thing they will show you, that is how to analyze the candlestick patterns and what is the basics of candlestick patterns. So let me show you how to learn the basics of candlestick pattern analysis for day trading and how to do consistent intraday profits out of that analysis. But before that, let me give you a short intro of mine. Hello friends, I am Indrajit from stockmaniacs.net. If you want to grow your wealth from the stock and commodity markets, hit the subscribe button and hit the bell notification icon. You can also send me your stock market related queries through WhatsApp in my number +91 96743 21856. Now my dear friends, while doing the candlestick pattern analysis, first let us understand what is a candlestick. So in the term candlestick, the term candle is there. So we can understand the candlestick is a variety of this candle, and this analysis has been introduced by the Japanese. So many people also tells them Japanese candlesticks. Now we all know what is a candle because we all light up a candle in times of Deepavali. So the candle is a thick thing and where there is a upper wick, and we actually light the upper wick in times of Deepavali. So similarly in the stock market also there are candlestick. So now let us understand what is a candlestick. So first let me describe the bullish candlestick. Suppose this is a bullish candlestick. So what is happened here? You can see the market opened here. In this candle, whatever time frame you are using, suppose this is the 5 minutes candle. So this time the market opened here. This is Axis Bank chart. So Axis Bank opened here. Then it made a low here. Then it made a high here. And finally the price has closed here. So this is a bullish candlestick because the open is at lower side and the closing is at higher side. And there is a lower wick and there is a higher wick. And now we will find what is a bearish candlestick. Suppose this is a bearish candlestick. The Axis Bank opened here, then it made a high over here, then it made a low over here, and finally the price has closed over here. So this is how a bearish candlestick looks like. How to identify a bearish candlestick? Because bearish candlestick, you can see the open is higher than the close. So close is lower than open, and you can find that the bullish candlesticks are actually printed in green color and the bearish candlesticks are printed in red color. So you can identify this is a bearish candlestick, this is a bearish candlestick, this is a bullish candle, this is a bullish candle, this is a bearish candlestick, this is a bullish candle, this is a bullish candle, this is a bullish candle, and so on. So now we can understand what is a bullish candlestick or a bearish candlestick looks like. So why we are naming it as bullish or bearish? Because in a bullish candlestick the opening is always lower than the close, and whenever in the bearish candlestick the opening is always higher than the close. So the bullish or bearish depends on where the closing is actually done. So now we have understood the basics of candlestick. Now I'll find out two money making candlestick patterns that is useful for day traders. So let me maximize this chart. So I'll be adding another indicator in the chart. I'll be adding another indicator. I'll be adding a Bollinger Band, and this is zero the kite chart. So if you do not have zero the kite or something trading terminal where you can do your own candlestick pattern analysis, I'll give you the link to join zero the and get zero the kite. So from there you can open an account with zero the and you can actually get zero the kite instantly. So now from the studies I'll be adding Bollinger Bands. So I'll be adding the default Bollinger Bands. So now the two patterns, the two candlestick patterns that we will be discussing over here, one is pin bar, another one is engulfing. So now the first analysis is pin bar. So pin, we all know how a pin looks like. So this is basically a pin bar. You can see this is basically a pin bar, and whenever a pin bar is formed, there is a support. I am maximizing. So this is a pin bar. You can see this exactly looks like a pin bar. So this is happening from the lower side of the trend. So whenever the top of the pin bar gets broken, you can see the market is gradually moving up. And we can also find out a bearish pin bar. So it actually got found whenever on the top of the trend. So we can find this is a pin bar. You can see this is just looking like a pin. This is a bearish pin bar because it is happening at the top of the trend. Whenever the low of the pin bar gets broken, the market actually sees a fall. Once again, we can find out some bullish pin bar patterns. Let us find some bullish pin bar patterns on the lower end. You can see once again this is a bullish pin bar because it has actually found at the bottom of the trend, and once the top of the pin bar gets broken, you can see the market is gradually moving up. Now let us find another bearish pin bar. In the pin bar always the wicks should be the bigger than the body. Let us find some bearish pin bar on the top of the trend. Yes, this is a bearish pin bar. Once again we can see this is exactly a bearish pin bar, and once the low of the pin bar gets broken, you can see the market is gradually moving down. So this is how you can identify a pin bar pattern in the stock market. And if you can use the pin bar with this Bollinger Band, so that is a good trading setup. You can enter the trade accordingly. So let me go back to the end. And how to trade with the pin bars. Suppose you are getting a pin bar in the bottom of the trend. Suppose you are getting a pin bar over here, and you are also seeing that the low of the Bollinger Band is actually broken by the pin bar. The pin bar pierces the low of the Bollinger Band. Whenever the top of the pin bar actually gets broken, you can enter a buy trade for the target of at least the middle of the Bollinger Band. So here actually you can enter the trade because here the top of the pin bar gets broken. So you can enter the buy trade, and the stop loss will always be below the pin bar. The stop loss will always be below the pin bar, and the target will be the middle Bollinger Band. So here in this candle you can enter the trade for the target of the middle Bollinger Band, and you can see here actually the targets get achieved. Similarly, whenever you are entering a trade, whenever you are getting a bearish pin bar, I'll find out a bearish pin bar once again. Yes, suppose here you are getting a bearish pin bar. So the low of the bearish pin bar gets broken over here. You can find the market is moving down, and the target is the middle Bollinger Band. So in this way you can trade a bullish or a bearish pin bar. One thing you need to understand, the more long the wicks of the pin bar, the upper or lower wicks. In case of a bullish pin bar, the lower wick should be very big, and in case of a bearish pin bar, the upper wick should be very big. So the more longer the upper or lower wicks, the more stronger are the pin bars. So in this way you can trade the pin bars very well by using the Bollinger Bands and the pin bars. So now I'll show you another great candlestick pattern, that is the engulfing pattern. So what is an engulfing pattern? An engulfing pattern is something where actually you will find that the body of the previous candle actually got incorporated in the body of the next candle. So the body of the previous candle, it has been actually engulfed. It has been covered by the next candle. First, let us discuss the bearish engulfing. So the bearish engulfing will actually always cover the body of the previous candle. So now, if this is the previous candle and if this is the current candle, you can see in the current candle actually the body of the previous candle. This is the body of the previous candle. It has been engulfed. It has been covered fully. So this is the bearish engulfing pattern. So how to trade the bearish engulfing pattern? You need to note the low of the bearish engulfing candle. So whenever the low of the bearish engulfing candle gets broken, you can enter a short sell. So if you are selling here, because here in this bar the candle gets broken, the low of the previous candle, the engulfing candle gets broken, so you can enter a short sell trade. Your stop loss will always be the high of the bearish engulfing candle, and if you are taking a short sell trade, take at least 1:1 profit taking ratio or 1:1.5 profit taking ratio. So if you have a 1 rupee stop loss, at least you take a 1 rupees target or a 1.5 rupees to 2 rupees target. So this is how you can trade the bearish engulfing candle. Now let me show you a bullish engulfing pattern. So let me find out a bullish engulfing pattern. Yes, this is a bullish engulfing candle. You can see the body of the previous bar. This was the previous bar. If this is the current bar, you can see the body of the previous bar, it has been covered fully by the next candle. So in this candle actually it covers the body of the previous candle fully. So you need to note the high of the bullish engulfing candle. This is the bullish engulfing candle. You need to know the high of the bullish engulfing candle. Whenever the high gets broken, you can enter a buy trade with a stop loss below the low of the bullish engulfing candle. So if you are buying over here in this candle, you need to buy with the stop loss of this, because this is the low of the bullish engulfing candle, and you need to keep a 1:1 or 1:1.5 to 2 target. So if you are having a 1 rupee stop loss, you need to keep a target of 1.5 or 2 rupees. So if you can consistently follow this kind of candlestick patterns, you can make consistent amount of money, because these candlestick patterns are quite successful in identifying the trends early. So my dear friends, I have shown you my 2 hot favorite candlestick patterns for day trading. And if you can identify these candlestick patterns well, you can make consistent intraday profits from the stock market. So you can use these candlestick patterns with conjunction with other indicators like Bollinger Bands or RSI or something like that. So if you can use them with other indicators, they can increase the accuracy. But the basic thing is very clear. If you are trading these candlestick patterns, keep a realistic stop loss and keep a realistic target. The stop loss is already decided, because the stop loss will always be the high or the low of the signal candle, and you need to keep a realistic target, either 1:1 or 1:1.5 or 1:2 target. In case of the pin bar, there is the target is also been set by the middle Bollinger Band. So I have shown you my 2 hot favorite trading setups using the candlestick pattern analysis. So I'll suggest you that you can start doing day trading with these candlestick patterns, but there is a catch. Not only the day trading, these patterns are also helpful in other time frames also. You can trade them in 5 minutes time frame, you can trade them in 15 minutes time frame, you can trade them in hourly time frame, or even you can trade them in daily time frame. So if you are trading the daily time frame, it will be a positional trade. If you are trading the hourly time frame, it will be also a positional trade. But if you are trading the 5 minutes or the 15 minutes candles, it will be intraday trades. So my dear friends, I'll suggest that you start finding these patterns in some good stocks right now, like Reliance or SBI or Axis Bank or something like that, and you start commenting me back in the video where you have actually found those patterns, on which date you have found those patterns, or on which area or on which time frame you have found those patterns. I'll try to analyze your answers and I'll try to comment you back. So friends, I have completed today's webinar. If you like today's video, please do not forget to hit the like button. Please also do not forget to share it with your friends, because if you share it, someone else can also be benefited. If you have any queries, just ask me in the comments. I'll try to answer you as early as possible. Friends, thanks a lot for watching this webinar till the end. Bye bye.